While risk assets could continue to pull back for a time, the weight of the evidence still supports an ongoing bottoming process. In this video, we cover key support levels, weekly divergences, and a handful of Demarc charts. This is the inverse head and shoulders pattern that we've talked about for several weeks. Here was the target. We hit the target here. We've got an upward sloping trend line that may act as support here. We've also got a neckline here that may act as support. What once was resistance here may act as support here. Uptrend intact. While there's no question the bears made some progress late last week, the market did hold at a logical level. We've got a downward sloping trend line here that acted as resistance, acted as support here. This upward sloping trend line has acted as resistance here, here, and here. So it is possible at this intersection that at a minimum we might get a bounce. We just have to keep an open mind, even though we had a very weak close to last week. This is a weekly chart of VEU, the All World Index. The point of showing it is we have to keep an open mind about where we could go from here. We've got this 22-week moving average rolling over. That's bearish. We've got a downward sloping trend line here that's obviously bearish. It acted as resistance. From a bullish perspective, we have these MACD histograms moving up, which can foreshadow a cross like this, but you can get a head fake as we got here and go on to make a lower low. This is mixed ADX. This black rolling over tells you that the downtrend is weakening, but we still have red above green, which says the downtrend is still in force. Purpose of showing it, you have to remain flexible here. This chart could still go either way. This is a daily chart of VEU, somewhat mixed, but the shorter term picture looks a little bit bullish. This is the upward sloping trend line that we've been watching off the October low. We're well above it with an established uptrend. 20-day moving average up, that's bullish. However, this is the 50-day moving average rolling over in a bearish manner. This is the 200-day where price was rejected. So obviously, above this pink line, above this upward sloping line, if we move into this area here, that's still bearish. For now, we're in a bullish territory. This is a weekly version of the EFA ETF, which is foreign stocks. Also a mixed picture here. From a bullish perspective, this is held. We've come back down and we're trying to test this trend line here. So as of last week's close, there's still hope that this will hold. Somewhat of the negative slant is that weekly RSI hit 50 here and was rejected. If you're a bull, you'd like to see this move above 50. Also, Williams percent R, which measures momentum, not particularly a good sign that we came up, and we're also rejected at the negative 50 level, which is this center line here. If you're a bull, you'd like to see this move up above negative 20. If you're a bear, you'd like to see this reverse. It's a mixed picture. Price is still leaning bullish. Some concerns here and here. This is a daily chart of the S&P 500 index. We've got a clearly established uptrend. If you take this parallel line here and draw it here, it takes you down to this level here, which is also roughly a retracement level. If you want to know what the retracement levels are for high-low prices, they're 1333, 1321, and 1308. So from our perspective, as long as the S&P 500 stays above roughly 1314 to 1308, this upward sloping trend line will remain intact. We also have this downward sloping trend line that was broken here in a bullish manner. What once was resistance may now act as support. So the battle for supremacy between the bulls and the bears, it will take place between 1340 on the S&P 500 and 1308. This is a weekly chart of small cap stocks to put last week's performance in perspective. The S&P 500 only lost 7 points last week. The Nasdaq was able to finish in the black for the week, and small caps were up 1.22%. This is one of the charts that we use in one of the Shavako Capital Management proprietary models. And it still has a bullish look to it. You've got moving averages here that are ticking up and price coming above it. It looks somewhat similar to this period here, somewhat similar to this period here, or even this period here. This is a topping process in the market. Really doesn't look a lot like that yet. If this were to roll over here and this were to roll over, we'd be a little bit more concerned. But right now, small caps aren't all that concerning in terms of the look of their weekly chart, but obviously that's subject to change. Now we'll quickly scroll through some charts that show weekly divergences, both bullish and bearish. Most of these, if not all of them, seem to support the longer term to intermediate term bullish case. That doesn't mean we can't have a scare and go down and possibly even make a new low or retest the lows. But from what we know right now, we believe that any weakness would be a buying opportunity. This is a weekly chart of silver. You can see price is making lower lows, and MACD is clearly making higher lows, which is a bullish divergence. The dollar tends to be a safe haven currency. When people are nervous, they have a tendency to pile into the dollar. The dollar is making higher highs here, yet MACD on a weekly perspective, the histogram is making lower highs. This is a bearish divergence on the dollar. If the dollar were to fall, that tends to be bullish for stocks and bearish for bonds. Even this high here has not been confirmed by MACD histogram. It's lower than this level here when price was lower than this level here. That's a bearish divergence on a weekly chart. Conversely, the euro has bullish divergences. Price is clearly making lower lows. You're not looking at trend lines here. You're looking at slopes. Price is sloping downward, yet the bearish momentum is waning. This is a bullish divergence on the weekly chart of the euro, which tells us to be open to a rally in the euro sometime in the next 1 to 3 weeks. This is the Agg ETF, which is the Barclays aggregate bond fund, so think of this as the bond market. The bond market has obviously been making higher highs, yet bullish momentum is clearly waning. This is a huge bearish divergence on the chart of Agg, which says if you own Agg, you probably want to have an exit strategy in place. If Agg were to reverse, that would tend to be bullish for both stocks and commodities, bearish for the dollar, and bullish for the euro. This is the DBA, or the agricultural commodity, physical commodity weekly chart. Here is a bullish divergence. Price is making lower lows. And you can see in this case, this market has already reacted to it. So this bullish divergence here foreshadowed or forecasted this move here. And when you have some of your laggards like a DBA moving from a downtrend to an uptrend, that tends to foreshadow good things that would happen for risk assets. This is also a good sign here that you're getting a healthy move in the histogram. Again, it does not mean that risk assets won't make lower lows or have another scare, but it says as of now it will probably be a buying opportunity, but we have to keep an open mind. This is EWI, Italy, the weekly chart. You can see here price making lower lows. This is a bullish divergence here. This is much, much higher than this point here, yet price made a lower low. Obviously, Italy has been in the news, and the fact that you have a bullish divergence on the chart of Italy tends to bode well for the intermediate outlook for risk assets. We have a similar bullish divergence on the weekly chart of Spain, EWP. It's a weekly chart of IEF, which is the intermediate treasury bond ETF, 7 to 10 year treasuries. We have bearish divergences with a weekly MACD histogram. Price is clearly making a higher high here, yet MACD histogram is making a lower high, telling you that the bullish momentum is waning, and it can often forecast a reversal in price. We also have a divergence here. Price is moving up. Histogram moved down. Obviously, if bonds reverse, that would have a tendency to be bullish for risk assets. It's possible that even if we get a reversal, that IEF would move all the way up to this upward sloping trend line here. So we have to be open to a higher high in IEF. This is another laggard in the market, coal stocks. We also have lower lows in price, higher lows. That's a bullish divergence. Tends to be a good sign for the entire market. This is TBT. It's the ultra short long-term treasury ETF. When treasuries go up, this goes down. Made a lower low here. There's a gigantic bullish divergence, which tends to be bearish for treasuries and bullish for risk assets. Much like IEF, it's possible that TBT will go on to make a lower low even if a reversal is in the intermediate term future. This is a chart of TLT going back to 2008. The purpose of showing it is when the stock market took its final leg lower and dropped 25% from this point here to this point here, and this is March of 2009, TLT spiked higher, and as you can see here, was confirmed by the MACD histogram. There's nothing out here to the left that questions this move here in treasuries. Therefore, it supported lower prices in stocks. Let's contrast the previous chart with the present day. This move here last summer was confirmed by MACD histogram. This is TLT making higher highs. TLT has moved quite a bit higher since then, yet we've got a bearish divergence here. So this move here has not yet been confirmed by the MACD histogram. It's possible that MACD histogram will spike up, but as long as this divergence is here, we would be concerned if we owned TLT. It's rare that you see a divergence on a monthly chart, yet TLT has made a higher high on a monthly chart here, and MACD has made a lower high. This is a bearish divergence on the monthly chart of TLT. From a trend perspective, this is a long-term chart of TLT. It's a weekly chart. It goes all the way back to 2002. You can see there's an upward sloping trend line here that bounded price here, 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 and here. If we draw a parallel upward sloping trend line, it bounded prices here. After this point, treasuries or TLT dropped 22% in 5 months. We are now revisiting that upward sloping trend line, and we also have divergences on the chart. Again, we could see TLT move up and make a higher high, but it's highly likely, as long as these divergences remain, that this is not a good risk-reward period to either buy treasuries or own them in this area. At a minimum, you should have an exit strategy in place. This is XME weekly. We've got a bullish divergence with MACD histogram and price. This is a daily Demarc chart for the triple Qs, the NASDAQ ETF. Demarc charts are proprietary tools and indicators from Market Studies LLC. You can see here we've got an uptrend on the daily chart. The bullish case is these are propulsion targets here that came off of this low. That usually tends to be a good sign when you get targets that far away. This is somewhat of the bull-bear demarcation line. So from a short-term perspective, it's bearish that we were not able to exceed this and hold this green line here. Here is your propulsion target on the downside. And to illustrate in terms of Demarc counts, where a lot of markets may go, if we look at the sequential count, it's on a 912, a 913 tends to be exhaustion where markets reverse. To pick up a 13 here, this market would have to drop roughly 3.6% at least intraday from this closing price. Intraday, we'd have to drop below 6180. On the S&P 500, if we dropped 3.6% from Friday's close, that would take you down to 1305 roughly, which is very, very similar to the 1308 area that we mentioned elsewhere in this video. The takeaway is if we have short-term bullish outcomes, there's still a reason to be patient here that we might get a 13, and we also have potential support here. From a bullish perspective, if we can retake this green line, which sits at 64.65, then 69.27 starts to become somewhat realistic, and there's also resistance here at 67.15 on the daily chart of QQQ. This is a daily chart of IEF, the intermediate term treasury. Let's just look at some Demarc counts here. First, on this propulsion target, this tends to be a little bit bullish when you exceed this, so you can envision IEF possibly pushing higher. The sequential count is already on a 13 exhaustion, which tends to lean potentially bearish. The combo count would need 3 successive closes above this level here, which is somewhere in the neighborhood of 109.31. This is a weekly chart of IEF, mixed picture here as well. Target was hit here, but we're hanging around that level, which says we may be moving up towards 110.01. From a bearish perspective, we've got a 13 and a 9. So the level to watch is 109.33. If IEF trades above 109.33 for any length of time, that may send a bullish signal for IEF and a bearish signal for stocks. One other thing on the weekly chart of IEF that may potentially be bearish for IEF and bullish for stocks is that the Demarc wave count, which is a system that's a little bit different than Elliott wave, says that we're completing wave 5 up. And if you know Elliott wave, if you're at the end of wave 5 up, that probably means you're going down soon. If we move to the monthly chart of IEF, we have the same thing on a wave count. We have a wave count that goes all the way back to 2007 and is labeled as wave 5 up here. It doesn't mean you can't get an extension, but you can see here when wave 3 finished, the market went down. When wave 4 finished, it went up. Marking the 5 here, especially on a monthly chart, tends to lean bearish for IEF. This is a weekly chart of EWP, which is one of the market laggards, the Spain ETF. This is a combo count here on a weekly charts on a 912. From a bearish perspective, to pick up the 13, you would have to come down and close below this level here, which is 21.23. From a bullish perspective, your risk reward is fairly favorable here. The upside target is all the way at 35.15 and the downside target is at 18.54. The other thing to note here is the Elliott wave count, or I should say the Demarc wave count, here on a weekly chart also shows the potential for the end of wave 5. Again, this can extend lower, but it says the minimum requirements are in place for wave 5 down to be over, which would imply that you're either going to get a wave A up or a wave 1 up, both of which would be bullish, moving potentially towards this target here. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavako Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.